Hi folks, I'm Doug Hensley, President of Hertz Real Estate Services, and I'm coming to you today with our June 2026 Farmland Market Update. By now, most of the graduations and grad parties have passed, the corn and soybean crop has been planted, and with the passing of Memorial Day, summer has unofficially started. Crop production-wise, the cool and wet spring season has led to a slightly longer planting season in 2026 compared to recent years. This isn't necessarily good or bad, but the 6+ week planting window this year will now lead to a longer pollination window for the corn crop later this summer, so something special for all of you pollen lovers with allergies. For the farmland market across the Corn Belt, stable is the current word. The Chicago Federal Reserve Bank released its Q1 report in mid-May, showing mixed state-to-state land value results, but collectively yielding a 1% weaker reading in the first quarter of 2026 overall, but a 3% stronger reading year over year from April of 2025. As I've said so frequently across recent months, the farmland market is stable, largely because of little market inventory and more than enough demand to snap up the farms that are offered for sale. No new price records are being made, but still a strong market for sellers interested in making a move to sell a piece of land. Looking ahead to later this summer, there are 4 primary variables that I'll be watching closely, each that will play a role in shaping both the commodity and farmland market going into late summer and early fall. The first variable, of course, involves the weather. How favorable or difficult are growing conditions for the crop? We're off to a good start, I would say, to the crop year, but how things go in the next 90 days will determine how confident or sheepish farmers will feel with their crop going into harvest season and how aggressively they may pursue new farmland purchase opportunities. The second and third variables are both geopolitical, one involving China and the other involving Iran. China matters because of the sheer size as a potential demand source for exporting our commodity crops, and specifically coming off President Trump's Beijing summit. If China re-enters our markets as a buyer at scale for our corn and soybeans, it will matter to our grain markets. Iran is a little different animal. We don't necessarily export products in great quantity to the Mideast, but our conflict with Iran has impacted oil, fuel, and fertilizer prices, among other things, around the world, and is already impacting the U.S. inflation rate. At this point, beyond the military hostilities, the Iran war at some level seems like an economic game of chicken to see who can outlast the economic pain inflicted on the other, and clearly both nations are being impacted. Which leads to the fourth farmland variable, and that's interest rates and interest rate policy here in the U.S. The United States Senate recently confirmed a new chairman of the Federal Reserve Open Market Committee, Kevin Warsh, and the FOMC sets a short-term interest rate for overnight lending. Coming in, it was believed that new Chairman Warsh had a bent towards reducing short-term interest rates, but because of the geopolitical reality in the Middle East and the influence of high oil and fuel prices, we're seeing another uptick in inflation in our economy, which has already led to an uptick in longer-term interest rates and is likely to lead the Fed to increase short-term rates, all in an effort to tamp down another flare-up of inflation in our economy. All this to say, if we continue to see inflation ramp back up, and especially if long-term interest rates move meaningfully higher, we may see some pressure reemerge for asset values, including in the farmland market. The point is, there are several interconnected cross-currents in today's farmland market. So outside of the low supply of land available for sale in the market, growing season weather, China, Iran, and interest rates are the headline topics you should keep your eyes on this summer. In the Corn Belt, I personally believe there is a bit more upside potential for farmland values than downside price risk. We've largely been holding steady for a couple years in a tough economic environment, so if we get some good news, that's likely to show up quickly in both the commodity and land markets. We will continue to keep you updated with our sales work and what we see happening in the market. And we also have an upcoming series of landowner education seminars approaching in late July and early August. If you live out of state from your farm, we commonly encourage landowners to take this as an opportunity to travel back, visit your farm, and also attend a seminar to get a full update on all things happening in agriculture. It's a chance to hit two birds with one stone. So we hope to see you later this summer. I'll be back in a month with another update on the growing season and what's happening in the Midwest farmland market.